Welcome to Long Story Short, a podcast where two financial advisors, one rooted in financial planning, the other in investment strategy, break down the questions we're actually hearing from our clients. Each episode, we tackle one or two real-world issues that matter to high net worth individuals, from market-moving news to personal finance decisions with lasting impact. No jargon, no fluff, just clear, thoughtful insights from the front lines of wealth management. We keep it short, but we don't cut corners. This is Long Story Short.
Welcome to episode 1 of the Long Story Short podcast. This was an idea that Adam Newman and I have had for a while, and Adam's typically going to be my co-host on these, but for a very special episode 1, we wanted to bring Lowell Pratt, president of the Burney Company, on. This is someone who many of you, if you're our clients, know really well. But to give a brief rundown of Lowell's background, he's been with Burney from the beginning, isn't that right?
No, not the very beginning.
Of your career.
But this is year 40 for me, so I've been here a long time.
Been here a long time. So currently, Lowell's the president of the Burney Company. We oversee in total about $3 billion in AUM. Lowell, you've been here since the 90s, or since the 80s, I should say. I was born in the 90s.
That's right.
You predate me. So taking us back to the beginning, how did you join Burney in the first place?
So the Burney Company was in need of somebody with computer skills back in the mid-'80s when not many people had computer skills. And they needed somebody that understood, at least reasonably, finance. They had this custom system for keeping track of portfolio data, and there was an opportunity to convert that to an off-the-shelf program that they weren't positive could handle the size that we were going to throw at it. So we were actually a beta firm for Advent software, which for decades was the premier portfolio accounting software on the market, and I had the exact experience and education that they needed for that project. So that was my first project and my foot in the door.
Interesting. So you were tech support back in the day.
I was the original IT guy, and there's few things that I enjoy less running this business than anything IT related today. So yeah. I'm glad I moved on to other things.
Hard to believe. So what was your first impression of the firm back then?
So I didn't come here for this reason, but one of the first things I learned when I got here is we had a investment process that had beaten the S&P 500 since inception of the firm. That was probably 10 years prior, by a margin of 2 to 1. We had generated twice the returns that the market had over that period of time. The secret sauce, everyone believed, was in our stock selection process. So that obviously that fascinated me, and it's the reason that I stuck. I wanted to learn more about that process that was able to generate those kinds of returns.
So you wanted to get your foot in the door to learn about the process. You were willing to accept a
No,
computer.
the foot in the door was just so that I could pay for grad school.
Well, that's fair.
I had no idea that the company had the investment prowess that it had before I said yes to taking the job.
Oh, fascinating. So at what point did you realize that this was the industry for you?
Pretty much right away. I was going to grad school because I wanted a job like the Burney Company would offer, something in the investment field. I imagined myself initially being an analyst and then working up through the ranks to becoming a portfolio manager. That is very hard to do with established firms unless you have advanced degrees and credentials, which I did not have. This was right out of undergraduate at the time. So I was taking the master's program specifically so that I could have an opportunity to hook up with a firm like the Burney Company. So I just kind of was very fortunate that IT project led to that opportunity.
That's great. And obviously you had a few mentors along the way. For one, the namesake of this company, Burney Company, is after Jack Burney, who was really pioneering in what he was doing with security selection and analysis back then. So I mean, he definitely left a remarkable legacy. What did he mean to you personally?
Yeah, so I've had two mentors. My first boss, Ted Rosenberg, retired Colonel, Jack Burney, company founder, CEO, and chairman of the board for decades. They were both kind of combination father figure, somebody that I looked up to professionally. They were very different people. Ted was very strong with people skills, and the growth of the company that occurred in the beginning was all pretty much Ted, but Ted couldn't have done it without what Jack was bringing to the table in terms of the skill side of things. So they were a perfect team, and the two of them led the company. For my first couple of decades here, I actually replaced Ted as the company president years later. But they were both just cut from a different cloth. Anybody that's from a military background will appreciate the camaraderie and the esprit de corps that is common in that area. They instilled that. They and many other former military, all the original crew at the company were retired military officers, and it just makes a very different culture that still exists to this day.
I know both were characters in totally different ways. Can you share like a story or a lesson maybe from each of them that stuck with you through all these years?
So sure. Both would have been very fun to sit down and have a drink with. Ted was the life of the party guy. He his signature whenever you asked him how are you, his response was always truly magnificent. And he became known as Mr. Mr. Magnificent. And he just had that very upbeat, positive attitude in everything he did in life. And he was just a great person to be around. Jack would have been fun to also have a drink with. In fact, he was fun to have drinks with. I've done that more than once. But, in a different way, kind of, very great storyteller. And, they didn't go to their military backgrounds a lot in terms of like any action that they saw. But they all had very fond memories of the experience. And I went and later taught my kids. My only German is Sie haben Luft, which apparently doesn't make any sense at all today to even German speakers. It means I have air. But back in this would have been the 50s and 60s, I guess, when Jack was stationed in Germany, he was an armor officer. That is what the American officers would, as they held up their steins, would bellow out to get a refill of beer. Sie haben Luft. So they were just great people. Certainly, privileged to be able to spend as much time as I was able to spend with both of them.
Certainly. Is there anything you picked up in watching how they served or led clients that you try to emulate today?
Sure. So, Jack, very passionate about the investment process. He thought of like how we analyze stocks. He has a quantitative process that he developed back before computers existed. The West Point slide rule, which is hanging on the wall in one of our conference rooms, was his state-of-the-art computer. And just that passion about, doing something important and doing it very well, and never being satisfied that you've sufficiently polished the stone. There's always something better that can be done, and just always looking for that next opportunity to make a critical refinement that'll make the process, that much better. That was very much kind of who Jack was. And then Ted was just a natural born leader. Like he led by example. I was his trader and I guess sort of his portfolio manager when I worked for him as a portfolio manager. And his only mandate to me was, I want to own everything my clients own. I don't want there to be a single position that one of my clients own that I don't also own. So just make sure I have complete coverage of everything. Because he wanted to share the successes and he also wanted to share the struggles. He wanted to feel that. And so they just, they both, they had a lot of practice. They both had long military careers as leaders. So, it was natural for them to take those skill sets and bring them here.
So as you said, you worked under Ted, right? So Jack was sort of the CEO of the company, for lack of a better word, kind of oversaw the organization. Ted worked directly with clients. You supported Ted. But at some point,
Yeah,
you
but
broke.
hold on. Ted did become president of the company.
He did.
Later on, yeah.
Right, but you were working directly with him, working directly with clients.
Yep.
But at some point, you did break off and decide that you wanted to start managing your own book of business yourself. So when did you take that step, and what drove you to take that step?
So the company structure is unusual. The term that would be used today to describe it is a TAMP, a turnkey asset management platform. What a TAMP does is it provides core support for basically franchise owners, portfolio managers, advisors that own their own book of business, but they get a certain level of support. The nature of that support has evolved with time. I mean, we turned 50 last year, so there's been a lot of change that has taken place over a lot of years, but it's still very much that structure. Certainly, there's an opportunity that it took me almost 50 years to realize to acquire an equity stake, a sizable equity stake in the core company. But the other big opportunity has always been in the company is to own one of the franchises, and so. Because they had all had long military careers, there were a number of portfolio managers that were going to transition out. They were going to do a second retirement and actually retire this time. And so I just became one of the buyers of portfolio managers as they retired. And that was kind of my first path to equity within the company.
So that's a big step, going out on your own, making the big commitment to owning a relationship like that. What were some of the biggest challenges you faced in those early years?
Yeah, a number of them. Market's going to take a big downturn every couple of years, and one significant one probably on average every 5 years. So when you have a big commitment on a buyout, and then you have a big market hit that occurs somewhere in the midst of that, and the typical terms of the buyouts, they were like 5-year, buyouts. So I could pretty much count on having some big, unpleasant market episode in each one of those buyouts. And so just, from a cash flow standpoint, struggling through. Obviously, once you get the first one, bought out, you can use the cash flow from that one to help with later ones. So I've done a number of these transactions over the years. Each one got a little more comfortable, but all of them had periodic challenges.
Were there moments where you questioned your path?
Never. No, this is, I kind of I have a personality that sort of spans both Jack and Ted. Like, I enjoy the people part of it, and I enjoy, watching the company grow and blossom into, a more significant advisory firm. But I also am just as passionate as Jack was in terms of the analytics and the ability to create difference-making performance. And that's like, it's just a fascinating puzzle. So I've got the right personality really for the two roles that I've been in for probably more than half now of my company career.
Yeah, that's fair. But are there any lessons that you'd want to tell a younger version of yourself, or maybe today that would be like today's advisors? Anything that you'd want to hear from your seat today to yourself back then?
Well, I would tell them, kind of like from my own experience, is look for an opportunity to acquire an equity stake in an advisory firm. This is a great business. It's one that you can spend a lifetime growing with. It creates opportunities for many others as well as yourself. So try to become an owner, not just a worker bee, would be part of my advice. And don't ever lose the passion. There's a majority of advisory firms today that no longer care about trying to create differentiated performance. They just have given up on it. It's too hard. It's not important. Clients don't care about it. There's a million excuses. But a lot of the fascination of this business you're going to lose if you abandon that pursuit. And it's hard. It is a hard problem. A lot of investors have tried this unsuccessfully, but there are paths to success, and it just makes this a much more compelling opportunity to spend a life, to really dedicate a life towards, if you keep that passion for making a difference. And I'll just remind everybody that's forgotten their compounding math. Little performance differences compounded over a long time translate to huge differences in ending wealth. So, a percentage point of excess return, should not be dismissed as not worth pursuing.
Performance matters.
Because performance does matter.
That's right. So obviously any organization that's been around for half a century is probably still around because there's great culture and you want to keep that, but it's also going to change. So what were some of the biggest shifts that you've witnessed over the years?
Well, pretty significant ones. I mean, if you think about like technology, where that was when I came here, a lot of the record keeping that we did, it was redundant at the time because we did have this not very good custom-made system that, when it wasn't crashing 3 times every day, was somewhat useful back then. But there were paper, records of everything because you couldn't just rely on the computer back then. And there's a certain pace that you operated when that was your world, and there was a certain scale. Like when you get started, you've got relatively just a handful of clients, and kind of I'll call it the service model that's appropriate for that type firm is very different than when you become a $3 billion firm and you get to, to a place where like there's too many clients for me to know everybody. Now that wasn't the case, back in the beginning. And there's all these transitions that you go through, just as a function of time and keeping up with the changes that occur in the world. They're not all fun. Some of this, I got dragged kicking and screaming through some of that perhaps, but like it's all necessary evils to if the important proposition at the end is delivering excellence to your clients, all of that is necessary to achieve that.
So maybe some specifics then, like how has the way that clients are being served changed?
Well, I'll take our biggest group within the company is a good example. We have way too many clients for any one advisor to be responsible for. So you need a whole team. And that one advisor can be most efficient if he's or she is also supported by a whole team that specializes in different areas. So having like an investment team and a client service team and a research team, a technology team, all of that, specialization leads to a much higher performing entity than what would be possible if, in the beginning, where it was basically one portfolio manager and his or her assistant doing the best they could.
Have clients changed at all?
Well, I think the human part of it is pretty consistent. Like who we are, we're not going to change a lot in 50 years, just basically as human beings. It's the wealth of our typical client has changed a little bit. In the beginning, our minimum new account was $50,000. A really big account was one that was $100,000. So, I'd say, we have more affluent clients today than we had 50 years ago. But people are people, and you need to like people, but for the most part, that's a great part of our business is the relationships that you get to form. As I mentioned, this is year 40 for me. We still have clients here that have been here longer than me. So it's really tremendous to be able to build relationships that endure decades.
What do you think clients are looking for when they go to hire an advisor, and how does Burney fit that?
Yeah, so probably peace of mind, I would say, is at the top of the list. This is an important job, managing their financial affairs. They know it needs to be done well. They know there's potential for big mistakes, big, costly, maybe even, significantly life-impacting mistakes. So having confidence that you have picked out somebody that can kind of guide you through the storms, I think is number one. Clients of ours are going to care about performance too, and because that's always been, a main area that we've invested a lot of energy in. So, it'll be different things, but I think peace of mind is top of the list for every relationship that we have.
I've got one more question looking back before we look ahead. But what are you most proud of when you think about how the firm has grown?
I'll say all the young people, and I'm going to include myself in this category, because once upon a time I was a young people here. All the young people that have had professional opportunity to grow into significant roles in the company, that in combination with all the good work that we've done with our clients for all of these years, it's a very rewarding experience when it's all said and done.
So we've looked back, now I want to look ahead, because I know this is something that you're intentionally focused on right now as well. But where do you see Burney heading in the next 5 to 10 years?
So it's going to be a lot the same, only bigger and better is kind of the way I think about it. Like who we serve, I think will be the same. The team that will exist 5 years from now will largely be the team that's in place now, but with people graduating to more, significant roles as they're professionally ready for that, that next step. I think along with that will come some more scale, but that's not really the driver. Philosophically has always been just like, let's do what we do really, really well and do it passionately for our clients and let everything else just kind of happen as it happens.
Yeah, that's great. So in this industry, there's, we oftentimes think of risks and we think about opportunities. There's markets, there's changing technology like AI. So what opportunities and risks do you think will define this next chapter?
Well, that 5-year time frame is a good example. AI will be either the driver of productivity gains for a firm like ours, or it'll be the thing that kills a firm like ours. Like it'll be very significant. 5 years is a good amount of time clearly it will largely have played out over that window. So there's I'd say that's the fastest change that we've had to incorporate. And certainly the one that's got the, it's the only threat really I can think of where there's mortal risk, from a company standpoint, as part of the proposition. But we've always been a firm that embraces technology. Along with that means you have to accept change and, appreciate the fact that change occurs at an accelerating rate. So I think we've got the right mix to be one of the survivors and beneficiaries of this next big technological revolution that's underway right now.
So with that as the backdrop, what advice would you give to the next generation of advisors stepping into leadership roles?
Put your client first. Do everything from the vantage point of what's better for them, and everything else should work out.
That's great. So a couple questions here in closing. But what's one value that you hope remains core to Burney forever?
Our dedication to our clients.
Dedication to clients. And if Jack were listening to this conversation, what would you hope he hears?
I think he'd be very proud and happy to hear that that's kind of the guiding philosophy. That was always his main point of view. Every decision was made from that point of view. That's exactly what I hope the company represents going forward.
Well, Lowell, thank you so much for joining us and sharing your wisdom. The firm's been around for a while, and I almost feel like we need a historian to make sure that the record is accurate long term. So I appreciate you giving us that history lesson and bits of wisdom for the future.
All right. Appreciate it. This was fun. Thank you.